Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Hey, this is Stan the Annuity Man, and welcome to Fun with Annuities. Today we're going to talk about MYGAs, M-Y-G-A. MYGAs is fixed rate annuity. It's the annuity industry's version of a CD. You're probably never going to hear about them from your agent at the Bad Chicken Dinner seminar because the commissions are very, very low. Unfortunately, they're not going to show that to you. I think these are great products. If you're a CD buyer or you like principal protection, just getting an interest rate, MYGAs are fantastic. I'm the number one agent in the country, licensed in all 50 states, and I don't say that boastingly. I'm just telling you a fact. And one of the reasons I'm there is because I've embraced these simplistic products, contractual guarantees only products. I'll guarantee you that I'm the number one MYGA guy out here because we have a live feed on our site. If you go to theannuityman.com, we have a feed there that shows the best national rates, and you can filter it by your state and by the duration, 1, 2, 3, 4, and 5 year. You can look at it. It's live. You can see. You don't have to sign up for anything. You can see what the rates are. And I want people to understand that these are available. And so because we've made it transparent, I think that has just set us apart. And I love these products because they're easy to understand. If you bought a CD, this is no different from the standpoint of you're getting an interest rate for a specific period of time contractually. But we'll go over the difference between CDs and MYGAs. The CD is not better than a MYGA, and a MYGA is not better than a CD. They're just pretty much the same thing. So the outline for this podcast is the book that I've written, one of the 7 books, MYGA Owner's Manual. You can get it at my site, theannuityman.com. I'll ship it to you for free without obligation. I won't bother you or pester you. I won't have anyone call you or show up at the door. We'll send it to you. And then you can go to the live feed and look at all the rates and decide for yourself if a MYGA makes sense. So MYGA Owner's Manual, you need to get one. I'm holding one in my hand. You'll probably hear pages flip because I'm flipping pages to make sure I'm going over everything in this podcast. But as with all products, I start with the limitations. So let's go through the limitations and benefits. The limitations of MYGAs is, like, for instance, if you buy a 5-year MYGA, 5-year guarantee, the surrender charges are high. In other words, if you get to year 2 or 3 and say, you know what, Stan, I don't want to do that anymore, send me all my money, the surrender charges to get out whole, get out with all your money, they're predatory. So you have to know that going in. They're locking these rates in, and the annuity companies don't want you being able to pivot. They're going to guarantee that rate for that specific period of time, but if you pivot, it's going to cost you a surrender charge to get out. That's a limitation. Other limitations, the guarantees are backed by the carrier. Yes, there are state guarantee funds, but you should not make your decision based on that. You should make your decision based on the claims paying ability of the issuing carrier. So that could be a limitation, right? We have to discuss that and go over the ratings and the Comdex scores and things like that. And currently, the shortest term MYGA right now is 1 year. Typically, there's not a lot of choices on the 1 year. There's a lot of choices on the 3 year. But as with CDs, you can get them, 6 months and 18 months and things like that. Like I said, the CDs aren't better than MYGAs. MYGAs aren't better than CDs. But one of the limitations is right now, from an inventory standpoint, 3 years is kind of the shortest, even though there's a couple companies that do a 1 year. But in my opinion, if you're going to do a 1 year, buy a CD. And by the way, I don't sell CDs. I'm just saying, and the best place to shop CDs is bankrate.com. In my opinion, the best place to shop MYGA rates is theannuityman.com because we have the live feed. And I guess the other limitation is not all carriers offer MYGAs. I guess it's just part of their business plan. Not all of them do. Some of them do. Some of them specialize in it. If you go to the live feed on my site, you'll see some names you've heard of and some names you haven't. There's hundreds and hundreds and hundreds of annuity companies. And by the way, annuities are issued by life insurance companies, okay? But with that being said, I think the last limitation is, and it's in the limitation, but when you take money out of an annuity, of MYGA, it's taxed last in, first out at ordinary income. So it's taxed gains first, interest first. So those are the limitations. Let's go over the benefits real quick, and then we'll dive into the product even deeper. Number one, with MYGAs, there's no annual fees, similar to a CD. It's just a specific interest rate for a specific period of time. Very simplistic. It's contractual. So you can filter that on my live feed, or you can say, hey, I just want a 3-year. What's the best 3-year guarantee? The interest rate annually is contractual. They can't change it during that duration time period. They can after it if you don't transfer to get the money out, but during that time period, they can't. It's contractual. And MYGA rates are typically higher than CDs 3 years and out. I always tell people, if your time horizon's 3 years and in, you probably want to buy CDs. If your time horizon's 3 years and out, MYGAs will probably beat CDs. So in a laddering standpoint, if you said, Stan, I want to do a 1, 2, 3, 4, and 5 year ladder of fixed rates, the 1 and the 2 year would be CDs. The 3, 4, and 5 year would be MYGAs. Because why? Will do, not might do. You're buying an annuity for what it will do, not what it might do. You're buying it for the highest contractual guarantees only. And under that standpoint, typically MYGAs 3 years and out offer higher interest rates than CDs. And I say typically, there's anomalies here and there, but majority of the time that's the case. Here's one of the main differences between a CD and a MYGA, multi-year guarantee annuity, fixed rate annuity. You can call it what you want. With a CD and a non-IRA account, you have to pay taxes on that interest every year. With a multi-year guarantee annuity in a non-IRA account, the interest compounds tax deferred. Now, yes, when you bring it out, you have to pay taxes. But if you say, I just want a rate, but I don't want to pay taxes on every year, I just want to defer it, then a MYGA works because it just compounds tax deferred. That's the primary difference between the two products from a structure standpoint. Now, from a safety standpoint, CDs are backed by FDIC, which I think is the strongest backing on the planet. I know there's arguments about the federal government and the debt. I'm just saying, realistically, F stands for federal. That's the best backing you can get. So, their state guarantee funds back annuities, but at the end of the day, it's the claims paying ability of the carrier. But the difference, the main structural difference is that the interest rate in a non-IRA account compounds tax deferred. Now, in an IRA account, whether it's a CD or a MYGA, and you can use these in both, it's an IRA. It's deferred anyway, so you'll have double deferral, right? I guess a benefit, I think, is low commissions to the agent. I'm the number one MYGA guy out here, I think. I can't imagine anyone focusing on them more than I do because I love them. I think they're simplistic and they're good for the consumer because the consumer just is looking for a place for safe money. Most people out there are just looking for some safe money alternatives, but the commissions are very low and they're easy to understand with no moving parts, which I think, I keep saying this in all my podcasts. If you can't explain it to a 9-year-old or a 7-year-old, no offense to those people, those kids, then you shouldn't buy it. It's the Warren Buffett rule. If you don't understand it, don't buy it. These are very simplistic. You understand CDs. You lock it in for a specific term, and every year you get paid a specific interest rate. With multi-year guarantee annuities, you're going to get an annual statement because there's no moving parts. It is what it is. So with that being said, let's kind of jump in. And I'll go through, I'm flipping the book. I've got some notes, but I'm also flipping through the book because the MYGA Owner's Manual is pretty all-inclusive when it comes to all this stuff. So that's the limitations and benefits. When you look at the fixed rate world, there's the fixed index, which is a fixed product, and we'll talk about that in another podcast. But that returns based on an indexed option. It's pretty complicated. But with the MYGA fixed rate annuity, the returns is a contractual number. It's something that when you see the policy, it'll tell you exactly what that number is going to be. I like MYGAs because you don't have to take the money out. You can roll, like for instance, if you bought a 5-year MYGA and you said, I really don't need the money, we're at year 5 and I don't really need the money, Stan, we can just roll it to another MYGA, meaning transfer it. The IRS has a code, the section is 1035, and 1035 says, IRS code 1035 says that you can transfer one annuity to another annuity without tax consequences. Now, you can, if you have your MYGA inside of an IRA, you can transfer it from IRA to IRA without tax consequences. But in a non-qualified setting, non-IRA setting, you can transfer it from one annuity to another and just keep, hockey analogy, pushing the tax puck down the ice. And I like that. So you can just roll it and roll it and roll it. I am also a big proponent with MYGAs of laddering MYGAs. First of all, if you ask me, hey, what do you think about interest rates? I'm going to say, I've been at 3 decades and I have no clue. The longer you're in the financial services business, the more that you understand that you cannot predict any of this stuff, especially interest rates. So with that being said, I'll tell someone that says, hey, if you have $300,000, why not consider buying a 3-year, a 4-year, and a 5-year MYGA and splitting it 100 and 100 and 100. Why? Because you'll have money coming due starting in year 3 and then every year after that. And then hopefully we can attach and transfer to a higher interest rate at that point in time. So I love laddering MYGAs for my clients because it's a simplistic way to lock in safe money, to get a guaranteed interest rate, and to not time rates because nobody can time interest rates. Now, MYGAs have nothing to do with lifetime income, okay? It's an interest rate product, just like a CD. Some MYGAs allow you to take out the interest on a monthly basis. Some MYGAs do not. On my feed at theannuityman.com, that live feed I told you about, we'll show you there whether it allows you to take money out or not. Some do, some don't. You know, the ones that don't obviously pay a higher percentage annually, but not all the time. That's not the determining factor. But they're not all the same, even though they're somewhat of a commodity product. So you have to look and you have to say, you have to answer the 2 questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? From that, if you say, hey, Stan, I want this MYGA, but I want to be able to peel off the interest every month, then we have to go shop for that one, right? We have to go shop the best MYGAs out there that allow you to do that. Or if you say, I don't really care, in 5 years, I don't plan on touching it. Let's just go get the best interest rate. Then we'll shop for that. But once again, I don't know. These things change. That's the reason there's a live feed on my site that you can look at your leisure without having to sign up or give your name. You just click it and then filter it, and it'll show. It's very easy to understand and very simplistic to use. We get a lot of compliments about that. And it was designed for that because I'm not some techie person, and I want people to be able to access the information on their own terms without having any hindrance to do that. Currently, I'm telling people to look at a 5-year as kind of the limit of, where we should be locking in the long term. I don't think you should go past 5. That might change if interest rates change, but currently I think 5 years is max. And you could go farther out, but if you look at the feed and you pull up the 5-year and the 7-year and the 10-year, there's not a lot of benefit proposition for you to go longer. They're not rewarding you for going longer in the term. So that's the thing. 10-year treasury is the bogey. That's what you need to be looking at all times. That's somewhat of the driving factor. It's not 100% of the driving factor because companies price these MYGAs based on their overall portfolio bonds from way back in the day, et cetera. But the 10-year treasury is the bogey. If the 10-year treasury moves either north or south, then you might see the MYGA things move. I always kid people. They say, well, do they move quickly when it moves up? No, it's kind of interesting. I don't know if there's a study on this, but just me observing as Stan the Annuity Man and the MYGA dude out here, when rates lower, it seems like the annuity companies move pretty quickly or quicker. And when rates go up, they drag their feet just a tad. And maybe that's just me looking at it through a jaded lens, but it seems that way. But they do. It's a commoditized world. So if somebody moves, the others are going to move with it or choose not to and lose the business. So, you're the winner either way, but there's just no timing. In other words, if rates move up, I can't tell you that within 10 or 15 or 30 days, things are going to change. I can't tell you that. It's kind of like the kids, turning the jump rope and the kid, for people out there to remember that. Young kids don't even know what that is, but for us, old people, we remember turning the jump rope and then trying to time it to get in. It's kind of like that with pricing and interest rate movements. The annuity carriers are watching each other and they're just seeing what other people do. And then they all react based upon their goals and what kind of money they're going to raise with the interest rates, et cetera. But I like the compounding interest of a MYGA in a non-IRA account. I think that is a positive because you got to remember in the world that we live in, there's really 5 safe money places in the world. And of course, the tinfoil hat people can argue against this all day long and say, you're wrong, Stan. Here are the 5, okay? CDs, money markets, AAA municipal bonds, treasuries, and fixed rate annuities. Those are the 5. I'll do them again. CDs, CDs, money markets, AAA municipal bonds, treasuries, and fixed rate annuities. Those are the 5 safe money places, in my opinion. And people always are looking to maximize yield. Once you start chasing those extra percentage points, or in the industry we call them basis points, once you start chasing that is when you start putting your money at risk. Now, the tinfoil hat people are going to say, well, the treasury, I've got arguments against that, and there's arguments against everything, right? But in the real world, in the rational world that we live in where nothing's perfect, those are the 5 places for safe money, and MYGAs fit there. So for people that just do not want to lose anything and they just want an interest rate, those are the places to go. And in a low interest rate environment, nothing's perfect and nothing seems high enough, especially for the people that have lived through the Jimmy Carter years where interest rates were so high. We're probably never we in our age group, and we'll probably never see that again in our lifetime. Maybe we will, but I don't think so. I think we're in a new norm where rates are going to be low for a while, but who knows? Don't try to time it. Keep the maturity short and maximize the yield by shopping all carriers, whether you're shopping for CDs or you're shopping for MYGAs. So, MYGA to me is just owning the contractual stake. There's a lot of sizzle out there. There's a lot of presentations, and people, if you went to an agent and said, I'm considering a MYGA, they're going to immediately tell you they can get you a better return with an index annuity or variable annuity. They can hypothetically, theoretically, back-tested, hopeful, unicorn chasing the butterfly, maybe get you that, but they can't contractually get you that. And if you're going by the will do, not might do, you own an annuity for what it will do, not what it might do, stantra that I go by, then you're going to buy a MYGA. You're not going to buy the hopes and dreams. And if you're buying hopes and dreams and market returns, then go buy market stuff. Don't, in my opinion, buy annuities. Annuities are contracts. And we'll talk about other types, indexed and variable annuities and those things in other podcasts. So with most MYGAs, I'd say 99% currently, 98% currently, they do not have any attached riders or anything. They're just straightforward. Hey, here's the percentage we're going to pay for the specific period of time. It's a contractual reality. It's not a dream. I always tell people, you're either going to buy agent dreams or you're going to buy contractual realities. And even if you buy the agent dream, you're owning the contractual reality. So let's just own the contractual reality from the start. Once again, MYGAs don't have any fees, annual fees. The commissions that are built in and hidden from you are low, which is the reason you don't see it. You can own it in anything, IRA, non-IRA. You can own it in a Roth. Always look at the surrender charges on it as well. And also understand that there's a free look period. I mean, if with all annuities, once they're issued, depending on your state, because annuities are issued and regulated, fixed annuities at the state level, there's a free look time period. You can get your money back if things have changed or you just decided you didn't want to do. I tell you what, to me, that's the annuities' best value proposition as an industry. We're the only industry in the world that can let you test drive a product and then get your money back if you don't want it. I think that's good. And I'm okay. And you don't have to give a reason. That's the other thing. I just want my money back. The carriers don't come back and say, why? No, they just send you your money back because it's the law. So I really like that. So to end the podcast, let's go through some frequently asked questions. And I'm going to flip through the owner's manual in the back of the MYGA owner's manual, frequently asked questions. And they might be repetitive. I might have already covered them, but we'll go through them quickly. And also remember, you can go to theannuityman.blog, and I have answered, I've gone through a litany. I'm building a huge inventory of frequently asked questions, of which you'll see the question, and then underneath it, you'll be able to hit a play button and listen to me answer it. And I'm very proud of that. I'm working hard of that every day to just keep building and building and building that inventory so that, you'll understand what's out there and the truth about it. So let's go through the frequently asked questions and go from there. Difference between a MYGA and a CD, that's always the question. Remember, the primary difference is the fact in a non-IRA account, the interest on a CD you have to pay taxes on, and the interest in a MYGA defers. That doesn't mean you don't ever pay taxes on it. You just can defer it until you pull it out, which I think is a good deal. How safe is a MYGA? I get that question a lot. It depends on the claims paying ability of the carrier. Each state has what's called a state guarantee fund, that agents can't use in a sales pitch. They can't say, buy this because of the state guarantee fund, but they back up annuities to a specific amount. Every state's different. And I think I'm going to give you the correct website address. It's www, N as in Nancy, O as in Oscar, L as in Larry, H as in Harry, G as in Gary, A, NOLHGA.com, NOLHGA.com. That's the State Guarantee Association. You can look up what that limitation is for your specific state. People always ask me, hey Stan, how long should I lock these things in? Right now, you'd have to kind of push me a little bit to go past 5 years, but I'm okay with like a 3, 5, and a 7-year MYGA ladder, as long as you have some shorter durations in there. But I really don't want you to go longer than that, just because when you go to the MYGA feed at my site, theannuityman.com, you'll see that there's not a lot of benefit proposition for locking in longer. Okay. So, should you buy a CD or MYGA? It depends on, your time horizon. If your time horizon's 3 years and in, or 1 to 2.5 years, it's CDs. If it's 3 years and out, it's MYGAs, just because you're going to find the best rates there. So short-term CDs, love CDs, don't sell CDs, but I love them. They're great because they're contractual. They're easy to understand. They're transfer of risk, right? Same thing with MYGAs. It's just that 3 years and out, MYGAs typically win. And this is one I always get, because people are always getting pitched index annuities, which are very, very complex. And then, I tell them about a MYGA, multi-year guarantee annuity, fixed rate annuity, and they're like, is that as simple as it seems? Yeah, it is. It's a CD. It's very simplistic, very easy to understand. One thing people always say, well, they buy these MYGAs at maybe high rates, and they want to add money to the MYGA. I guess this is a limitation as well. You cannot add money to a MYGA after it's issued for 99% of the carriers, okay? You'd have to just go shop for another MYGA if you wanted to add money. So once you lock it in, it's locked in. Some allow you to add money before it's issued. In other words, you send the money and you go, oh my goodness, I want to do more. You can send it before it's issued. But I would say carte blanche across the board, most of them don't allow you to add after that. Not all carriers, offer MYGAs, which is, good and bad. Just some of them don't have that in their business model. And a lot of people always ask me, Stan, why doesn't my favorite carrier, whatever the name that is, offer MYGAs? It's just not what they do. There's some companies that specialize in MYGAs, and there's some companies that specialize in immediate annuities, and there's some companies that specialize in other products. But that's the reason you have to shop all carriers. And typically, MYGA rates change pretty frequently. And on the site, the live MYGA feed, we show you when the rates change, et cetera. So that's MYGAs. That's fixed rate annuities, something that you really need to look at for your safe money. I'm glad you joined us. I hope you keep joining us for these podcasts, because I'm going to keep digging into these products and going deeper into strategies as well. So with that, my name is Stan, the Annuity Man, and you have been listening to Fun with Annuities. See you next time. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.